Stephen Rowles, analyst at CFC Seymour, joins us live from Hong Kong. Stephen, good to have you with us. Do you think the Bank of Korea made the right move by hiking? Where do you see rates in Korea from here?
Well, I think looking forward, we're going to see rates to be on hold. It was a very surprising move. And the reason for the move was because of concerns over liquidity growth. But looking at last week's consumer data, or consumer price inflation, it came in right at 2.5%, contained. Today, PPI came in at 2.4%, down from 2.7%. And monetary base yesterday came down lower to 13%. So the inflation concerns are really a preemptive move, and that's what made them do this. And it's based upon the total recovery in the economy, based on the consumer recovery.
You know, inflation obviously a concern, but to what extent do you think the strong Korean won will help to offset some of the rising import and raw material prices?
That's a good point, and that's something we look for. We look for an appreciating won. However, exporters are also going to get very concerned. When you talk about the won, you also have to look at how it is affected by the yen carry trade. As the yen declines and the won hovers or appreciates just a little bit, it's really having an impact on their competition with Japan. At the end of the day, do you want to buy Sony or do you want to buy Samsung? You're going to buy the one which is cheaper. So looking at the Japanese won cross, it's really moved from 8.3 a year ago to about 7.7 today. So it's getting harder and harder for Korean exports to compete. They're doing well right now because of China growth is being very strong. But looking down the road, I think we're going to see more and more concerns come out of the exporters.
Stephen, it's Anna Martin here in London. The US Treasury Secretary Henry Paulson has said that this is a repricing of risk, all this volatility in the markets. If that's the case, where does that leave the carry trade?
Where that leaves carry trade is what we're seeing today. We're seeing green across the whole map, and we're seeing a return to some riskier asset classes. And we saw that in US Treasuries declining yesterday. So we're going to see the carry trade continue, and we still look for the Japanese yen to decline here. As looking at the Japanese data lately, we don't see any reason for a rate hike in the near future, as it's getting more and more difficult because they're in a deflationary period, and machine orders yesterday were way down as well, down 10%. So it's getting more and more difficult for Japan to normalize rates.
Stephen, what about the high yielders like the Aussie recovering a little bit today because the RBA hiked rates yesterday? Is it time to buy back the Aussie now?
I think so, and we saw that in strong unemployment numbers today as well. They continue to be at a 33-year low, so inflationary pressures continue to be there. I don't see another rate hike this year, as political situation will take over a little bit, and I think that perhaps in the first quarter we could see another rate hike, but inflation outlook continue to be quite strong, and what we're seeing across the entire world is inflation pressures being strong with $7 to $8 oil last week and food prices moving across the board. We're seeing inflation sort of take away the headline from subprime these days.
Stephen, it's Anna again. Over the last few days, we've seen quite a lot of reports coming through from China suggesting that the authorities there might be considering, or at least giving the rhetoric that they are considering, some more dollar selling. Is that something that you anticipate, and how does that influence your views?
I don't think so. It didn't come directly from the authorities of China. It came from some of the academics of China. And it's this trade battle, potential trade battle, lingering in between the U.S. and China, but I don't think it's a true concern. I think that if we ever heard it come from a direct government official, maybe, but I don't see that happening, and I think that we'll continue to see what we're seeing between the two nations.
So far, a lot of political noise. Stephen, as always, great to have you on Capital Connection. Thank you very much.
Thank you.
Stephen Rowles, analyst at CFC Seymour. Well,